Welcome back. We are now hearing that Google has chosen SWI, and now the new coin called SWI, which launched just a year ago in 2024, is now leapfrogging internet computer when it comes to AI integration with stable coins and major players like Google. In today's video, we're going to be exploring what is happening from the, I would say, like mega corporations and venture capitalists from the investment side in crypto. Because while we think that our cryptos are going to go up to the moon, there is clear indications of where the big money is moving their money and what they're choosing to invest in. And by the way, we're also going to be talking about the Ethereum and Bitcoin treasury companies because we have the likes of Grant Cardone saying that the days of the Bitcoin treasury mania is over. This is the Cryptoviser podcast. We got a lot to discuss, everything having to do with crypto, investing, and blockchain. Make sure you guys are subscribed to the channel. Do me a favor, also give this video a thumbs up down below. That lets me know you guys enjoy this content. It helps out with the video. And guess what? It's free to do. Crypto is not free, but thumbs up are always free. This is going to be a high-level analysis of where the market is and where the market's going now that we are in the end stages of 2025 and basically past the 18 months since the Bitcoin halving, which traditionally is when the top of the market is hit. So give the video a thumbs up, and we're going to be starting right here with the mania with hyper liquidation coin and blockchain. Circle and USDC expand into hyper liquid. Now, you guys know how I feel about hyper liquid. I mean, it's literally in the name, hyper liquidation, right? There, that means liquidate you as fast as possible. And this gives me very similar vibes to some of those exchanges and DEXs that we saw in 2021 that failed in the bear market. But let's understand what Circle is doing here because you guys know how I feel. Listen, many of you guys may not like Circle, right? But at the end of the day, they're an indicator of where the money is moving, and they are effectively becoming the new or the central bank for the digital world. And so today, they said, marks a major milestone in the expansion and engagement in the hyperliquid ecosystem with the official launch of native USDC and cross-chain transfer protocol on the hyperliquid EVM, bringing the world's most reliable, liquid and interoperable and globally available dollar stablecoin into the community. Additionally, in the coming weeks, they said they're going to enable direct deposits and cross-chain transfer protocol interoperability for hyperliquid USDC on Hypercore. Alongside this launch, pay attention, guys, Circle is now a direct stakeholder, aka they own the coin. They bought Hyperliquid in the Hyperliquid ecosystem with our first Hype token investment alongside a comprehensive program to work with the most innovative HIP3 and Hyper EVM builders in the community. We're also evaluating the possibility of becoming a Hyperliquid validator. Well, as you guys know, in my view, listen, I think Hyperliquid is basically a liquidation platform. Ultimately, let's understand a little bit more about what Hyperliquid is. Hyperliquid is a performant blockchain built with the vision of a fully on-chain open financial system. Liquidity, user applications, and trading activities synergize on a unified platform that will ultimately house all of finance. Now, it is its own blockchain. Keep that in mind. It's a layer 1 blockchain. They use a custom consensus algorithm called Hyper BFT, Byzantine fault tolerance, I believe, inspired by Hot Stuff and its successors. Both the algorithm and networking stack are optimized from the ground up to support the unique demands of the layer 1. And so it's just another layer 1 ecosystem. Got it. But we have Circle integrating with them, newer blockchain, right? They have full interoperability now. And that opens up the floodgates to money, whether it happens now or in the future, it doesn't matter. And you guys know if you've been watching my video for any length of time. Interoperability is key, but USDC is more of a key, right? I've said this for years. I told people in 2020, Cardano needs USDC. No, Cryptoviser, we don't need USDC. USDC is crap. And meanwhile, now they have a $1 million market cap stablecoin instead of a multi-billion dollar stablecoin on their chain. And it's not just Cardano. There's a lot of chains that don't have USDC, but it's the key. You know how I know it's the key? Well, what happened just recently with XRP? XRP moved into a different stage in its development, and USDC activated USDC natively on the chain. So it is becoming a very clear key of what is going to be integrated into regulated finance, what is going to be integrated with the traditional financial system. And it's also kind of an indicator for regulatory compliance in a sense. And that's why it's very interesting that they're investing in Hyperliquid. If we scroll down here, we can get into the business investments. It says over the past decade, Circle has they built Circle into a broad-based, increasingly full-stack internet financial platform, expanding and investing globally to build this powerful internet utility. We're still in the early stages, and we recognize, along with so many other participants, that we are just at the transition of all of finance on chain. But notice what they're saying, and I completely agree here. To be the world financial system or involved in the world financial system, you need broad-based and increasing full-stack internet financial platform. You need to be able to connect to Chainlink. You need to be able to connect to Tether, to Circle, to the Euro coin. You need to be able to connect to Ethereum, where all the building is going on. And yes, some of these other chains as well, like Solana and Sui and Avalanche and all these other ones, right? But if you silo yourself, if you silo your blockchain, you're also siloing the possibilities. Now, I'm not talking about from a market cap perspective, because if you look at XRP and Cardano, they have very high market caps, but they're not integrated. They're siloed blockchains, right? Because they don't have the interoperability. They don't have the stable coins. Maybe XRP does now, but it's still a siloed blockchain. There's no interoperability. There's no smart contract movement from one chain to another to be able to move value, wrap coins, and stuff like that. That is a problem. And so that brings us to the next discussion about what Google is doing, because Google has just announced a new AI platform that's going to support stable coins, and they partnered with Coinbase. So again, this is about full interoperability. This is so key as we move into the next stages of this crypto cycle, right? So Google unveiled, and by the way, it gets way better. You guys are going to have your minds blown in a minute here. Google has unveiled a new open source AI platform that supports stablecoin payments alongside traditional methods like credit and debit card purchases. And by the way, if you're up to this point in the video, make sure you guys are subscribed and also give the video a free thumbs up. You can also become a channel member by clicking the join or subscribe plus button down below. Thanks to all of our channel members who help support the channel every single day with either becoming a channel member or at least giving the video a free thumbs up. The platform that Google has unveiled is designed to streamline transactions between AI applications, making payments faster and more flexible. To integrate stablecoins, Google partnered with Coinbase, which has developed its own AI and crypto payment system. Brian Armstrong, the CEO of Coinbase, said that they're aggressively implementing AI and writing the company code. From my understanding, about 30% of the code within Coinbase is written by AI. They say, in addition, Google has collaborated with the Ethereum Foundation and more than 60 other organizations, including Salesforce, American Express, and Etsy, to ensure broad compatibility and secure transactions. And so then they talk about leveraging AI agents for autonomous transactions. Google said that it's going to leverage AI agents to facilitate seamless autonomous transactions between different AI applications. Google's new agent-to-agent payment protocol expands on a framework launched earlier in 2025, which standardizes communication between AI agents. The new system makes sure transactions between agents are secure and executed according to human intent. Okay, now if we go to the actual Google Cloud announcement about this, okay, this gets into who they're partnered with. And who are they partnered with? Well, they have partnered with Sui, and they're going to be using Sui. Okay, so they say this is from Google. Google announced that Agent Payment Protocol, or called AP2, an open protocol developed with leading payment and technology companies. They're collaborating with a diverse group of more than 60 organizations to help shape the future of agentic payments, including Adyen, American Express, and International, Coinbase, Etsy, Forder, Intuit, JCB, MasterCard, Mistin Labs. And then they go on to a few more. Now, what is Mistin Labs? Mistin Labs is the developer behind Sui, the, in my view, shitcoin. Okay, and you can see here, verified agents making purchases on behalf of verified users is the next frontier for AI-powered automation. Google's agent payment protocol combines programmable payments with modern blockchains like Sui, with open protocols like A2A and MCP that are enjoying rapid growth. It's the perfect substrate for real-world agentic commerce. So effectively, they're using Sui. They chose Sui. Google chose shitcoin. Now, that's my opinion. The reason I'm saying shitcoin is because it's a new coin, right? It launched last year, launched in this bull market, in this Bitcoin halving cycle. It's new. It has all the technologies and capabilities of legacy blockchains and more, but it's leapfrogging the AI ecosystems that we talk about on this channel, like internet computer. And I think there's something to say for the fact that these billionaire coins like Solana, like Sui, that when they're supported by billionaires, they're going to get billions and billions and billions of dollars, or billions of dollars of potential exposure through these type of partnerships. And I don't know why. Maybe some of it is that Google wants a new blockchain that doesn't have a lot of integrations or a lot of use cases yet. That way they can kind of guide the blockchain and guide the development the way that they want it. But you look at another blockchain like Internet Computer, and the Internet Computer Protocol has been building out AI capabilities and AI agents and AI agent technology for literally years at this point. But they're not being chosen. They're not being adopted by any other ecosystem, but you have a brand new shitcoin that is being adopted by these other ecosystems. You have a hyper liquidation coin that's being adopted and integrated with Circle. And meanwhile, when we look at Internet Computer effectively does not have interoperability. Interoperability is not a single bridge or a single capability, right? Because people are going to say, but Cryptoviser, Internet Computer does have what they call chain fusion technology, which allows Internet Computer to interact with other ecosystems. But it's not interoperability, okay? Because interoperability is multiple ways to interact with multiple chains. If you look at Hyperliquid, right, they have the Hyperliquid EVM, they have the Hyperliquid ecosystem directly, they have native USDC. Then the native USDC can also interoperate via the cross-chain transfer protocol. And then if you include Chainlink in there, then you have the cross-chain interoperability protocol. And so there's multiple ways to interact with these other ecosystems, and it allows the other ecosystems to very seamlessly interact with the chain that you're trying to get them to use. Because again, more usage on the chain equals higher valuation. At least it should. But meanwhile, Internet Computer only has one interoperability feature, and that's chain fusion technology, which is good technology, but it should not be the only one. It does not have native USDC. It does not have native Tether. It does not have any interoperability directly with Ethereum type bridges. It does not have Chainlink integration. Why not? Right? Because again, we're now in almost 2026. And so this idea that, oh, well, we're working on it is bullshit, because Sui already has all of it and it was launched within the last year. So how does Sui get Chainlink integrated, USDC integrated, Google integrated, and more, and Internet Computer can't? XRP doesn't. Cardano can't. Right? And people are going to say, oh, because it's the money, it's this and that. But at the bottom line, Solana has it, Sui has it, Hyperliquid has it. So can you really say Internet Computer, XRP, Cardano are the top blockchains in the world when they don't have the basic bottom level technology that you need, which is interoperability? It's a non-negotiable at this point. I mean, it really is. So yeah, that's kind of where we are. I mean, the billionaire coin, Sui, I call it a shitcoin, is now leapfrogging Internet Computer. And that should not be happening, but it is. So what is going to be the the follow through from Dfinity, from Internet Computer? Are they going to expand the capabilities of Internet Computer? Are they going to integrate USDC and Chainlink and Hyperliquid and all of these other ecosystem chains? Maybe, maybe not. But this is definitely something that we have to keep our eye on because Google chose SWI, not Internet Computer. And meanwhile, in the Chainlink conversation, which we've been having for quite a while now, this is the interoperability layer for TradFi, for traditional finance to link into DeFi and for DeFi to link back to traditional finance. It's the bottom line. Whether you like it or don't like it, agree with it or don't agree with it, it doesn't matter. This is where the future is. And again, on this channel, we are analyzing the market and potentially making investments based on the data, not based on how we feel, not based on how much we love the coin. We're not maximalists. We will never be maximalists. We're not going to hold the bags for somebody. We will buy based on merit, and we will sell based on not looking good, right? Or based on this is not the best investment. And at the end of the day, there's some cryptos that have been doing extremely well. And by the way, some non-cryptos, just crypto-related products like the Bitcoin mining companies that are pivoting to AI, they're all doing extremely well. Some of the cryptos that we've talked about doing extremely well, some underperforming, right? And these are the reasons why, right? People say, but Cryptoviser, why is the price not going up? This is the reason. They don't have Chainlink. They don't have USDC. They don't have Google. But meanwhile, SWI does. Now, again, this doesn't mean that the price going up is the indicator that they're going to continue to go up, right? This is based on a lot of speculation. But look here, Chainlink announces that Saudi Awal Bank, one of Saudi Arabia's largest banks with over $100 billion in total assets, is leveraging several Chainlink services to facilitate the deployment of the next generation on-chain applications in Saudi Arabia. And so effectively, they're going to be utilizing the cross-chain interoperability protocol. Whoa, we just talked about that, and the Chainlink runtime environment. And so now you have banks with Chainlink. And this is not the first bank, and it's not going to be the last bank that's integrated with Chainlink. And so if your chain is not connected to Chainlink for whatever reason, right? Oh, it's the money. Oh, they want a lot more technology. Whatever the reason is, guys, at this point, if your chain is not connected to Tether, USDC, or Chainlink, one of the three, it's over. It's over. There's no way that they're going to be getting it now, right? And meanwhile, look, Tyco adopts Chainlink oracles to power their data. Layer 2 network Tyco integrated Chainlink data streams to deliver reliable on-chain market data for DeFi and institutions. So a blockchain that nobody's ever heard about, that's potentially brand new, has integrated Chainlink, but Internet Computer can't do it, XRP can't do it, and Cardano can't do it. Oh, no, Chainlink wants too much money. Oh, but Tyco can pay that money? Like, guys, this is complete and utter ridiculousness, right? And again, I'm not here to convince you of anything, right? I'm just giving you guys my analysis on the market. It's really sad because it's the same shit as the previous cycle, right? Like, you would think by now, Cardano would get USDC. I mean, XRP got USDC. Why doesn't Cardano have it? Why doesn't Internet Computer have it? Well, I don't know. But that brings us to the next part of the video, which is the treasury companies. Because there's a lot going on with the treasury companies. And by the way, remember what I said in September, the beginning of September, end of August? I said, this is a bull trap, right? There is no such thing as an extended cycle. The bull market is going to end at some point, and we're going to go into downtrend. In my view, what we're seeing happen with all of these Bitcoin and Ethereum treasury companies is the indicator. They are already in bear markets. And people they're the most bullish. They're like, oh no, it dropped. We got to keep buying. And now we're seeing a lot of this. Sharplink's current MNAV is 0.93, meaning you're paying 93 cents to get $1 worth of value, effectively. That's what the MNAV is. Now, if this is what Strategy is, Strategy's MNAV is 1.5. You can see that right here on the screen. That means that you're paying $1.50 for $1 worth of of crypto. So you're overpaying here, and with SharpLink, you're underpaying. But just because the MNAV is below does not mean that it's bullish. A lot of people think that it is, but it's not. In my view, the market is pricing in a downtrend in the crypto prices. Because this MNAV, like if the stock price stays the same, but the crypto price goes lower, the MNAV will go higher. And so that's what we're going to see on this. And with strategy, with MicroStrategy, we're going to see the opposite. Meanwhile, SharpLink is now buying back 1 million shares as their treasury sits at $3.8 billion. So they're buying back shares because their MNAV is lower than 1. And so it makes financial sense for them to buy back, right? And then they can sell it back when it hits $1 if they want to. I don't know that they're going to. But the volatility in the MNAV, in my view, is the volatility indicator, not just for these cryptos, right? Or stocks, but for the entire cycle. Because at the beginning of a cycle and at the end of a cycle, you get the most volatility. Up and down, up and down, up and down. And disconnects from where the market should be, right? Why do we have Ethereum treasury companies that are below 1 MNAV, but the Bitcoin treasury companies are above 1 MNAV? Well, a lot of that I think has to do with the market pricing things in, right? We talked about this with Kindly MD just the other day. Kindly MD or Nakamoto, their buy price is basically the all-time record high, $118,000. And their stock price went from $10 down to, it's like $1 or something like that right now. And so their MNAV is lower, but people are like, oh, this is great. This is so bullish, buy the stock. But they're not thinking about what if the Bitcoin price goes down? Because in my view, the MNAVs going down is telling you that the euphoria in this trade is ending. And when the euphoria in this trade ends, they can't raise as much money, which means they can't buy as much crypto. If they can't buy as much crypto, the price starts to go down. If the price of the crypto goes down, the stock price is going to go down, and it's going to compress the MNAV. And so in my view, the market always prices everything in. Look at the Federal Reserve rate decision, right? Everybody thought that they were going to cut rates by 0.25 percentage point, and they did. And what happened in the market? Right? Do we see everything moving up straight? No, it's already priced in, right? So we may still see upward movement, but I do think eventually we're going to see the correction there, right? Anyway, we're now hearing Michael Saylor saying if Bitcoin goes to $100 trillion, there will likely be a $200 trillion credit on top of it, saying this thing is going to be big. Okay, when I'm recording this, Bitcoin's around $2 trillion market cap. So to get to 100 trillion, it's a 50x. It's possible, but I mean, I think it's going to take a lot longer than most people think. But let's listen to what Michael Saylor said.
This thing is going to be big. There's no reason that credit, digital credit, the credit on gold became bigger than the gold supply. The digital credit may be bigger than the Bitcoin network. If Bitcoin goes to 100 trillion or 200 trillion, there could be 200 trillion of credit on top of it. You know, you may not want to issue it. That's up to you. Someone will want to buy it, you know, and that is the future that the market will determine. And the market is 100 industries, 100 capital markets, and your job as a Bitcoin treasury company, solve the problem, solve the compliance problem, solve the tax problem, solve the issuance problem, solve the credit problem, do the marketing, do the product design, solve the distribution problem, evangelize the future of digital capital and digital credit, and roll with the punches, right? Don't get liquidated on volatility, you know, build the most robust structure you can.
Now,
this thing is going to be big.
Now, this video is from a conference in New York called the Bitcoin Unconference that took place in September. First of all, the more I'm seeing Michael Saylor, the more he looks exhausted. I mean, I don't know how much you could talk about Bitcoin. I mean, he's literally talking about it every day, all day. This must be so exhausting for him. I mean, I kind of feel bad because, you know, there's only so much you can talk. I mean, on this channel, we can only talk about, you know, Bitcoin going up or going down so often, right? People are like, but Cryptoviser, you flip-flop. It's like, because if I talk about going up all the time, people get bored of that. And if we keep talking about going down all the time, get bored of that too. And I get bored of it, right? So we have to change it up every once in a while. But he does. He looks like he's exhausted by this, right? And the thing is, he can say whatever he wants. Bitcoin's going to 100 trillion, it's going to 100 quadrillion. It doesn't matter. This is in the future. And how long in the future, I don't know. But I would imagine this is going to be decades and decades, right? And granted, if you're thinking about long-term investment, yes, focus on this. But again, you also have to look at the risk. The risk of owning Bitcoin is different than the risk of owning MicroStrategy. And a lot of people who hold MicroStrategy stock don't understand that. And there is also talking about the MNAV. There's no reason the MNAV should be over 1, period. End of discussion. No reason. The only reason it is because you don't have the ETF mechanism of redemption. So if you remember back in 2020, Grayscale was the only Bitcoin product out there, right? And Grayscale was not an ETF, the Grayscale Bitcoin Trust. And so, and by the way, most of the Bitcoin, the Grayscale products were not. And so they were all trading at usually above the MNAV. And what happened was during the price of the crypto going higher, the price of the asset didn't go that much higher, and the MNAVs dropped below 1. And so people were arbitrage playing that. Under 1 MNAV, they were buying, and then it was going above 1 MNAV, and they were selling. And the reason they were able to do that was because it was a closed fund. Now that you have an ETF, it's an open fund, meaning you can literally go to, if the MNAV is over 1, you could go to Grayscale and give them your Grayscale ETF a share, and they'll give you the Bitcoin back. And so then you can go arbitrage play that. And that's why you see the MNAV of the ETFs equaling 1. It's never above or below. And so that's why we're seeing MNAV on these products, because there's a premium, because these products are new. These products are buying a lot. There's a lot of excitement around them. But there's no reason that any of these, whether Ethereum or Bitcoin, should be over 1 MNAV. There's no reason. There's absolutely no reason that they should be above 1. The reason they're above 1 is because people don't want to sell, but nobody's really buying, right? Granted, there's some Wall Street buying of it, but most of that is just getting their initial, like BlackRock or Vanguard or State Street, just getting an initial position in these. They're not like constantly buying MicroStrategy. And so when we do hit a bear market or turbulence in the markets, this MNAV moving is the indicator of where things are going. But a lot of these MicroStrategy bulls, they just look and they're like, oh my, Michael Saylor's my idol. And I'm like, why? He bought Bitcoin. What is so idolizing about that? What is so amazing about that? He bought Bitcoin. People are like, yeah, but he's raising debt. He doesn't have to pay for it. It's like, guys, all of the insiders have been extracting value from MicroStrategy. MicroStrategy is extracting value from MicroStrategy, which is you, retail, buying the stock. They're extracting value from you. That's not just with this. This is with SharpLink, with Bitmine Immersion Technologies, with BitDigital, with ETHZilla, all of these treasury companies. They're extracting value from you. That's why you see the stock pumping and then dumping. Now, MicroStrategy is on a little bit of a different plane because they were the first to be in. So they have a lot more substance, I guess you would say, than some of these newer companies. But they were all there. And they're doing this in a bull market. We've seen value extraction this whole cycle so far. Earlier in the year, we were talking about the Solana meme coin fiasco. And the meme coins were literally extracting value from the ecosystem. Now, these other companies are. And what happens after value extraction? Whew, price goes down. And so I'm not saying these companies are not going to work out. I'm just saying that there's no reason they should be above 1 MNAV. This is why you see SharpLink buying back their own stock, because they're trying to get the MNAV up. They should not be doing this, in my view. They should let the MNAV stay lower, wait till the price corrects for Ethereum, down, and if the price stays the same, the MNAV will now be 1. But they're buying back at highs because they think Ethereum's going to go higher, and it may. But over the next year, I think the trajectory is lower because they all bought and the price barely moved higher. And the liquidity is drying up in the market. We see it across the board. I mean, guys, companies are now stopping their 401k matches for their employees while the company is buying back $1 billion of their own stock. How does that make sense? And so there are a lot of risks in this market that people are not seeing. These conferences typically indicate top signals in the bull market, at least, right? But yeah, I mean, I do feel bad for Michael Saylor. I mean, you have to talk about one thing every day of your life for years and years and years, just one thing. Not Ethereum, not crypto, not TradFi, not Chainlink, just Bitcoin. Bitcoin, Bitcoin, Bitcoin. And the only conversation is we're going to buy more Bitcoin, buy more Bitcoin, buy more Bitcoin. Like, what is the point of that? I think Michael Saylor would be a little bit more excited, and I think that investors would be a little bit more excited if they were buying companies, right? Not just, they have enough Bitcoin now. Now buy companies. What kind of companies? Maybe some of these Bitcoin mining companies with AI plays. And maybe they're waiting. Maybe they're waiting for the bear market to do this because we're hearing now things are starting, the conversation is starting to change. This video is Jack Mallers with 21. Now he's saying that 21 is not a Bitcoin treasury company. And why is he saying that? Well, I'm going to show you the video in just a second. Grant Cardone, a well-known real estate and equity investor, he said, the day of treasury Bitcoin mania is over. If you don't have a real business at the core of your Bitcoin strategy, you won't have a sustainable business. Seems everyone is running to duplicate what Michael Saylor did. Forget that he had a real business, real products, real sales, customers, and cash flow. Now, obviously, the Bitcoin business is now bigger than that business, but there is still some cash flow coming in. So let's listen to what Jack Mallers says here, because this is interesting because he hasn't really said this before, right? All these companies were saying, no, we're just going to be a Bitcoin treasury company, Bitcoin treasury company. And then you see Nakamoto, Kindly MD, which literally bought the top of the market at $118,000. Their stock is down 95% since this purchase. Since this purchase, it's down 95%. And apparently we're still in the bull market, even though I don't think we are in the full bull market, but a lot of people do. Anyway, let's listen to Jack Mallers. And don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. Let's listen to Jack.
But I want to dive in to 21 today. So just for our audience, let's start by level setting here. Give us a brief introduction to 21.
Yeah, 21, we are taking the company public with a SPAC with Cantor Equity Partners. We currently have the third largest corporate Bitcoin position in the world in escrow, assuming a successful merger. And it was founded by Tether and myself with a minority but significant stake taken by SoftBank. So we want to be the best way to participate in this Bitcoin phenomenon in the capital markets. We plan to implement and run what people call a Bitcoin treasury business. But I think one of the biggest differentiators at 21 is we don't necessarily consider ourselves a Bitcoin treasury company holistically. Our founding group and our board consists of people that have built and currently run very successful, cash flow positive, high margin businesses in the space. We think there's a lot of opportunity to not only grow Bitcoin per share and raise accretive capital and acquire Bitcoin on our balance sheet, but build Bitcoin software, build Bitcoin cash flow, and change the world with the technology itself. So we are a pure play Bitcoin business. Everything about us stems from the white paper and OGs, as they say, that are now bringing Bitcoin to the capital markets in what we think is an attractive fashion. So that's who we are. We have let the markets know that we have submitted our S4 to the SEC. So we're currently in our quiet period pending approval, but it's an exciting time for us and the wider industry at whole, which I'm sure we'll talk about.
So very interesting take from Jack at this point. It's also, in my view, extremely interesting that they still haven't gone public. When we've seen all these other companies already go public, we've seen Kindly go public, we've seen American Bitcoin, which is the Trump organization getting into Bitcoin mining and Bitcoin infrastructure. This is the ON conference that's going on in New York City while I'm recording this video. We've seen Bullish go public. A lot of these companies have gone public, but 21 has not gone public yet. So I don't know whether something's caught up or whether it has to do with Tether or what, but it's interesting that they have not yet gone public and now they're adjusting from being pure play Bitcoin to also Bitcoin businesses. So that's going to be very interesting. We're also seeing Metaplanet doing some, different things. This is a notice of expansion of the Bitcoin income generating business through the establishment of a new subsidiary called Metaplanet Income Corporation. And effectively, we'll get back to that in a second. This is the letter. It says the company launched the Bitcoin income generating business in Q4 of 2024. This is Metaplanet. And since that time has steadily expanded activities generating consistent and growing revenue and net income. In order to further scale this business line, Metaplanet Holdings will establish Metaplanet Income Corp as a dedicated subsidiary to manage and grow income generating activities. Well. So now we have Jack Mallers saying that about 21, exactly what Grant Cardone is calling out here. Metaplanet is adjusting as well. But is it too late, right? Again, I think that they should be buying in the bear market. They should be raising money now, holding it on the side, and then buying in the bear market. The crypto, the companies, because there will be companies that go under. I'm telling you guys, there's going to be Bitcoin mining companies that go under, AI companies that go under, Bitcoin treasury companies that go under, potentially Ethereum treasury companies that go under in a bear market. Because again, like if you just look at Kindly, right, it's already gone down 95%. And their buy price is $118,000. Bitcoin is about $110,000 when I'm recording this, or maybe around the same price, between $110,000 $120,000. What happens if Bitcoin goes down to 50,000? Is Kindly's price going to drop to 50 cents or 40 cents or 30 cents? That's something you got to think about, because we're talking about this still at these prices, but MicroStrategy's buy price is 73,000. Their buy price is almost $20,000. Anyway, continuing on with what Metaplanet is saying here. They said the establishment of the new company, Metaplanet Income Corp, provides the company with an enhanced platform to pursue derivative operations and related activities that produce revenue and cash flow. Whoa, wait. So they're talking about getting into derivative trading. What is derivative trading? Selling covered call options, selling covered put options. That is what, if you think about like what Misty is doing, MSTY, Yieldbacks, and a lot of these other companies that have popped up, where they sell covered calls in the market and then they generate income from that, and then distribute into into dividends every single month, and very high dividends at that. But we're in a bull market. In a bear market, the premiums on the upside collapse. And by the way, they should have done this last year, right? Because by the time the next cycle comes around, if that's what they're going to build these derivative type products for, by the time the next cycle comes around, there's going to be so many different ETFs that are doing the same thing that I think that mechanism alone is going to lower the premiums, because everybody's going to be selling the covered calls. But who's going to be buying those covered calls, right? If you have 1 million people selling covered calls and only 20,000 people buying covered calls, or buying calls, I should say, there's an offset there. And so that would mean the price of the covered calls will go down. And so the premium would go down. The amount of money that they make would go down. So that may not be a viable business in the future. Again, it's odd that they're talking about pursuing derivative operations instead of a cash flowing business, right? Buying a Bitcoin mining company, cash flow, AI infrastructure, cash flow, a Bitcoin service provider, like a Lightning Network provider that's connecting, or something like that. Anyway, importantly, this structure enables a clear separation of the Bitcoin income generating business from Metaplanet's core Bitcoin treasury operations to enhance governance, transparency, and risk management. So they're all basically moving into this like, we want to make money. And by the way, Metaplanet supposedly they do make money through a Bitcoin hotel. Located in the heart of Tokyo, Royal Oaks Gotanda is currently being redeveloped into a facility featuring a lounge where shareholders can gather. This project aims not only to integrate Bitcoin into everyday life, but also to serve as a hub for education, innovation, community, and building. Shall we take a look at this Bitcoin hotel? Let's do it. So if you go to the Royal Oak Hotel website, again, this is Japanese, so this whole thing is being translated. This is the hotel, okay? I mean, it does not even look on the outside like, it doesn't look, I don't know, like a luxury hotel. But let's see if we can look at the room. This is the rooms. Let's look at the rooms. Okay. Conveniently located, 3-minute walk from the station. Okay. Whoa. Yeah. I mean, I don't know if this is, from what I've seen, a lot of, it's more of these kind of rooms they're more like hostels in Japan. Very, very small. I mean, it looks nice, but I mean, Metaplanet it's a Bitcoin company. I mean, there's barely any even art on the walls here, right? And again, I'm thinking about US based hotels. So maybe in Japan, this is how they actually look, very simple. But it's not like they're investing in the Waldorf or Astoria type of hotel, right? And again, I'm not putting it down. I'm just saying to say oh, we're going to go and get cash revenue, how much is the Bitcoin hotel actually making compared to the Bitcoin treasury operations, right? And so again, they need to really look at what they're investing in and what the income generating business is going to look like. At this point, I would say, personally, not investable, but down the road, it may be, right? If we go into the bear market and they do start building up their portfolio, because keep in mind, I do think that companies like MicroStrategy and Metaplanet that are in this kind of top, that are up here in the top of the Bitcoin holdings, even in a bear market, I think for the most part, they're going to be somewhat okay. And they'll have the opportunity potentially, if they have cash or are able to raise money, to buy some of the smaller ones that may not work out. And that could be very, very bullish for them. But is that actually going to occur? I don't know. We'll have to wait and see. So we covered a lot in today's video, right? We covered Google choosing SWI, not Internet Computer, for their AI payment system. We heard about Circle not only launching USDC on Hyperliquid, but then buying Hyperliquid tokens. We've talked about the necessity to have Chainlink connected and some type of interoperability so your blockchain is not siloed. And we talked about the MNAV and the business operations of these Bitcoin and Ethereum treasury companies, and the fact that they need to pivot. If they haven't already pivoted, it may be too late. But even if they are pivoting at this point, it may be too late because, again, in my view, the MNAVs of these different strategy companies, whether it's MicroStrategy or the Ethereum treasury companies or other Bitcoin treasury companies, the MNAVs compressing is letting us know that this trade is over and it's going to continue to compress, whether that's because the Bitcoin price goes up and the price stays the same, or the Bitcoin price goes down and the stock price goes down as well, or maybe the Bitcoin price stays the same and the stock price just drops. Either way, there's no reason that any of them should be over one MNAV, and I think that the market will correct it, whether now or shortly thereafter in the future. Let me know what you guys think about everything we covered in today's video. Let me know whether you agree, disagree, and what your thoughts and comments are. Don't forget to give the video a thumbs up, hit that subscribe button, and I will see you on the next video. Invest responsibly, do your own research. Thanks for watching, and crypto on.